Should I register my business as a sole trader or as a limited company? Now, there is no kind of one size fits all answer to this question because it really does depend on a few key factors. So in this video, I'm going to be giving you a brief introduction to both types of businesses, and then I'm going to be sharing with you 6 points that I believe are really important for you to consider before you make that all important decision. So what is a sole trader and what is a limited company, and what is the key difference between the two? Well, I want to try and explain it to you as simply as possible. If you think about a business, or your business for that matter, your business actually has a lot of connections and relationships with other people and other businesses, be it its clients, maybe suppliers, maybe creditors, people that you owe money to, maybe investors, and maybe even, the tax man. If you are registered as a sole trader, also otherwise known as being self-employed, all those relationships and all those connections are actually with you as a person as well. So in essence, for a sole trader, the business is you and you are the business. Now, if you are starting a limited company, this is where the difference lies. Within a limited company, you are actually creating a separate person or a separate legal entity where all of those relationships and connections come together. So if you have a limited company, all the relationships with clients, suppliers, taxmen, everything is in essence with that limited company, and there is a separation between you as a person and that limited company. Now, this will go on to affect a number of different things in the life of your business, and those are the things that you are going to be considering when you are deciding to start a business. Firstly, and definitely the most well-known difference between a sole trader and a limited company is the way that you are taxed. And generally, it is considered that limited companies can be more tax efficient than being a sole trader. Although I want to make a side note here and say that you often do need to cross a certain threshold of income before you see that really take effect. As a sole trader, when it comes to doing a tax return or a self-assessment, you will basically list all your personal income, you will list all the expenses that are done within the business, and then you will basically be taxed on the difference between the two. Whereas for a limited company, the tax affairs will be dealt with separately from your personal tax affairs, meaning that often there is an optimized mix of you being on the payroll in your business and also taking some dividends, which then tends to allow you to operate in a tax efficient way. Secondly, it's good to consider the people that are going to be involved in your business journey. This can both be investors or people that you are wanting to employ. And in general, I would say the rule is if you're wanting to involve people on an investment or an employment level, the limited company vehicle or setup tends to be better geared up for it. On the other hand, if you know that maybe you deliver a service and what you want to do is really just build your own brand name out and only have yourself involved, the sole trader vehicle tends to be perfectly set up for that. Thirdly, I want to talk to you about the difference in liability. As I mentioned in the introduction to the two models, there is a big difference in how these two types of businesses operate. When you are a sole trader, you are the business is you, and this is also true for the liability. So everything that happens within the business, you are personally responsible for, and when it goes wrong, it also means you are personally liable for maybe any money that's owed to a creditor, maybe any money that is owed to a supplier, and so that can put your personal assets at risk. If you start a limited company, it really becomes its own legal entity. And so if you get into debt as a company, if you owe money as that company, then really it does protect your personal assets as, that's just a separate legal entity. I just want to make a little side note here to say that if you do get a loan as a company, Oftentimes for banks or people that give you that loan, they might be wanting to put in a clause that to a certain degree, you might be personally liable for the complete or part of the debt. So when you do go on that journey, it's important to know that that limited liability might not always be as clean cut. So it's important to make sure that you really still know as a business owner what you are getting yourself into. Fourthly, I want to highlight the difference to you in credibility. Some larger companies, when they are deciding to choose a supplier, then they might prefer to do business with other limited companies because those companies come across as being more established and more credible than maybe a sole trader would. And so in this way, it gives them more confidence to really start a trading relationship. As an added bonus, as a limited company, you are required to hand in your accounts to Companies House, and they are publicly available. So it allows other companies to have a look at how your company has been doing and actually look at the trading history of that company. So there's a higher degree of transparency here as well. The next point that I want to highlight, and it's actually a point that I always really want to talk through with entrepreneurs and people that are in the process of starting up a business, is the fact that you need to realize that there are big differences in the level of reporting that is required and the associated costs that will bring to your business. If you are set up as a sole trader, the requirement for you in terms of reporting, in terms of tax returns, are actually quite low. It's fairly easy to do your own personal accounting, and there are a lot of sole traders out there that do their own tax return, they do their own self-assessment per year, so the costs associated with all that can be quite low. Whereas with a limited company, you are obviously required to do your corporation tax return, which is far more complicated than a sole trader tax return. On top of that, you'll often have to do a personal tax return as well. You'll have to do a confirmation statement. If you are wanting to take advantage of some of the tax efficiencies, you might be required to run payrolls, etc. And if you get the help of the needed professionals with that, this is not a problem, but there will be a slightly higher running cost with that, and it will really require you as a business owner to be more on top of your responsibilities for reporting for your company. So if you don't maybe feel quite ready for that, or if you don't feel like you've got the margin for that, the sole trader vehicle might be better for you. Lastly, I really want to highlight, and I really want you to consider this when you are making the decision of business setup, and that is how you are wanting to go about starting your business. Now, let me explain a little bit more here. Some entrepreneurs maybe play with an idea, maybe they are wanting to try something out, maybe they're wanting to test the waters, but they don't really kind of have a refined idea of how they want to set up their business, or where they want their business to go, or what their growth strategy is. They might be better off with the sole trader vehicle because it is easier to set up, easier to close down if they want to change things, and if that business idea really does grow and does develop, they can transition into a limited company. Equally, I also believe that there's an argument for people who are wanting to launch into business sort of all guns blazing. They have a strategy, they have people that they want to be involved, they have investment they want to obtain, they have bigger companies that they want contract with. They really have this growth strategy and growth mindset from day one. Then you might, what I call, start as you mean to go on and set yourself up immediately as a limited company. Make sure you've got your reporting and all of that in order from day one, so you can really run a business with all that you have. There are different types of businesses, there are different types of entrepreneurs who might go at building their business in a different way, and so the vehicle that you choose, the way that you choose to set your business up, really has to serve its purpose, and it really has to serve you as an entrepreneur in how you want to go about the business. So I really think that it is a valid argument to go and and look at how you want to approach this business, and then also choose the setup of your business in function of that. So those are the 6 points that I consider to be super important for you to consider before you are deciding your business setup. I hope there was some good information in there for you. I also hope that it got you thinking about your own business setup. If this video was helpful to you, please make sure to give it a like. If you have any questions for me, make sure you pop them in the comments. I'll definitely get back to you. And make sure that you subscribe for more finance business content to come. And then I will see you in my next one.